Welcome to the deep dive. Today, we're taking a closer look at Tesla, specifically its stock, TSLA, and sort of the market whirlwind from July 4th up to July 13th, 2025. If you've been curious about all the buzz or maybe why this company's stock seems to make such big moves sometimes, well, this deep dive is definitely for you. Our mission here is really to cut through the noise, understand the key events, and, try to figure out what it all means as you stay informed about the market.
Yeah, and what's truly fascinating here is how you have so many different forces acting at once. You've got new tech announcements, political headlines, all pulling a major company like Tesla in, well, different directions. The current price is hovering around $313, give or take. But understanding why it shifts day to day, that's our real focus here.
Okay, so let's dive into some of the positives first. The recent positive developments for Tesla, what really stands out as a big driver lately?
Well, I think a really significant event was back on July 11th. There was that announcement that Tesla plans to expand its Austin Robotaxi pilot service, expand it into the Bay Area. And this isn't just, about putting more cars on the road. It's seen as a really strategic move.
Yeah.
Analysts see it as a huge long-term growth catalyst.
Right, a catalyst. That's a pretty significant pivot, isn't it? And analysts are certainly excited, you mentioned.
Oh, definitely. Morgan Stanley, for instance, they attribute a massive chunk, like $250 of their $410 price target for Tesla just to this self-driving tech.
Wow, $250 just for that piece.
Exactly. And Benchmark's Mickey Legg. He even raised his target pretty substantially, went from $395 up to $475, really citing this robotaxi optimism. And these price targets, just for clarity, that's basically what analysts expect the stock might reach in, say, the next year or so.
Okay, got it. So it seems the market's perhaps starting to view Tesla a bit differently.
I think so. Less is maybe just a car company and more, is potentially this high-margin AI and robotics platform.
Yeah.
Which could unlock major upside, theoretically. We also saw Cathie Wood's ARK invest. They're known for betting big on disruptive tech, right? But they added nearly $18.5 million worth of TSLA shares across two funds, ARK and ARKW, on that same day, July 11th.
That's a pretty strong vote of confidence, then, from a well-known tech investor.
It signals continued faith in that long-term future vision for Tesla, yeah.
And looking just a little bit ahead, there's also that upcoming showroom opening in Mumbai, India. That's July 15th, could be a big push into a new market.
That's right, potentially significant. But, okay, now let's maybe explore the other side of the coin, the risks, the challenges, because those have certainly impacted Tesla too, especially this past week.
Absolutely. And speaking of those external pressures, one event that really sent ripples through the market was Elon Musk launching the America Party. That was July 7th.
Yeah, that caused quite a stir.
It did. Tesla shares plunged something like 7-8% that day, wiped off roughly $80 billion in market value, just like that. Investors seem pretty concerned maybe about his focus drifting away from Tesla because of these, political distractions.
And that reaction makes sense.
Yeah.
We also saw kind of mixed market reactions around the tariff extension on July 8th. Remember, new tariffs on certain goods were postponed. Now, Tesla itself recovered a little bit that day, about 1.3%, but the broader market was kind of down. Just shows how these wider economic and political uncertainties, they still create unease.
Right. It's not just about Tesla-specific news. And beyond the headlines, the actual core business numbers, they also show some complexity, don't they?
They do. The early July Q2 delivery data came in around 384,000 deliveries.
Yeah.
Now, that's actually down 13% compared to last year.
Okay, down 13%. So how are people reading that?
Well, it's mixed. Some analysts look at it and say, okay, maybe demand is weakening. Others argue, well, given the tough economic conditions globally, maybe holding relatively stable isn't so bad.
Two different takes on the same number.
Exactly. And then there's the whole valuation question. Wall Street analysts, on average, they generally have a hold rating right now. The average price target is hovering around $300, which, compared to the current price, actually suggests maybe a slight downside, like 4%.
So not a strong buy signal from the consensus then?
Not uniformly, no. While you have Goldman raising its target to $315 and Benchmark being very bullish at $475, you also have Mizuho trimming its target down to $375. And there was even one top analyst who cut their target from $315 down to $285, though they kept a hold. It just really illustrates the wide range of opinions investors are trying to navigate right now.
Okay, so wrapping this all up then, what does this complex picture actually mean for you, the listener? Tesla's clearly in the middle of some really high impact events. You've got the exciting potential on one side, the robotaxis, the AI, global expansion.
But yeah, those positives have to be balanced against these other factors, like the leadership distractions we talked about, the softer EV delivery numbers,
Yeah.
and a stock valuation that many would argue is already quite high, quite stretched.
So ultimately, it seems like if you're someone aiming for growth, maybe you can stomach the volatility. The sources seem to suggest holding or perhaps strategically buying on dips could be considered, especially if you really believe Tesla will deliver on that robotaxi and AI potential down the line.
Right. But conversely, if all these headlines and the big market swings make you uneasy, well, then you might want to consider if maybe reducing your exposure makes more sense for your own comfort level, at least until maybe the company's core business trends look a bit more stable.
Yeah, that makes sense. I guess the real question it leaves you, the listener, with is how much weight do you personally put on a company's sort of future potential versus its very real present day challenges and those external distractions? Something to think about.